Hey everyone, Derrick Goldensmith here, senior trader over at T3 Trading Group. I am coming at you with another stock review that we're going to be doing today. I'm talking about a position that I'm currently in, so we're going to start with a disclosure, Bed Bath & Beyond. So, I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. And here's a quick position disclosure. These are all the positions that I'm in currently, in about 12 longs, 1 short. The one that I'm going to be speaking about today is BBBY, Bed Bath & Beyond. I am currently long Bed Bath & Beyond. I've been long it for a little while. I was long coming into the news event last night, and let's talk about that. So, going to the chart here. Let's go back. So I've been trading this Bed Bath & Beyond really consistently since October 2020. And I actually started by trading this thing to the short side. I was shorting it. It had this big pop on a news event here where they announced that they were going to be coming in with a buyback, and the stock shot up on it. And I decided to originally trade it short. I was able to capture this down move here at the end of October, this gap down into November, and then I liquidated my position. I got back to flat, I think, in early November into the down move that Bed Bath & Beyond had. And the original thought process that I had was, I'm a big believer, I speak about this a lot to my team, look at the world around you. The world around you can give you clues as to what you should be trading, what you can be investing in, and for me, my original thought process was, this Bed Bath & Beyond is an old-fashioned company. I mean, who honestly goes and shops at Bed Bath & Beyond anymore? A bunch of old grandmas and grandpas out there, and that's probably about it. So I really wasn't a fan of the company. It seemed like one of these legacy retail companies that was just barely holding on as other companies like Amazon that focus on e-commerce are slowly taking over. And then my thought process began to change as I had a better understanding of the fundamentals and what the company was starting to do that actually created this initial gap up in early October. And the big thing was I was also paying attention to Macy's back at that time. And you can see here on my chart, going back to October, November 2020, Macy's has just been on an incredible run. Back then it was at $7 or so, and you can see this big gap up in early November in Macy's that I believe was on an earnings report. And then ever since that earnings report on November 9th, 2020, Macy's has just been on fire. This thing has basically worked its way up from about $7 to today, another huge day for the stock. It reached almost $32. So it's a huge move here. And I remember looking at this earnings report for Macy's, and I think, I'm not 100% sure, I think that they might have missed on their EPS number. But within the report there was a discussion about how Macy's was really beginning to focus on e-commerce. And I love that. I love when these legacy companies can change their business model. The first one that I really saw do that some years ago was get rid of 1B, Best Buy, BBY. I remember Best Buy had their CEO, this is years ago, I honestly don't exactly remember when, probably 4 or 5 years ago, that the CEO came on and announced that he was making a change in their business model where they were going to focus more on e-commerce in order to be able to compete with a company like Amazon, but they wanted to maintain their physical stores. The physical stores for these companies almost become like advertising at this point, and if you were to purchase something from Best Buy on their online marketplace, you could actually go into one of the stores and return that item if it wasn't what you were looking for. And that kind of stuck in my head. So then I saw Macy's make their announcement at the end of last year, and also then started to take a closer look at Bed Bath & Beyond based on this announcement. And also, shout out to Stefan, who's one of the people on the virtual trading floor, because he really also further brought the fundamentals of Bed Bath & Beyond to my attention. So it had this big gap up back here in early October. I think that's when they first were announcing the $1 billion buyback that they have now. I originally shorted it, was able to make some money on it, and then eventually I flipped along. This stock, it just so happens, became one of the big Wall Street Bets meme names in the beginning of 2021. I feel like Bed Bath & Beyond was one of the original Wall Street Bet meme stocks. Obviously, GameStop is first and foremost. Everybody knows the GameStop story. But when I think of the first explosion, the first big short squeeze that happened earlier this year, the three stocks that come to my mind right away are GameStop, AMC, and Bed Bath & Beyond. The difference between the three of those companies, and I might have upset some people in saying this, is that I actually think that Bed Bath & Beyond is a decent company at this point with their cash that they currently have on hand, with the buyback that they're doing, and with their change to focus on e-commerce, whereas GameStop, I personally don't think belongs at the prices it's been trading at, even though they're also trying to change their business model a little bit. And AMC, for the life of me, from a fundamental basis, I honestly don't understand. It's my one short that I have right now, and I've actually done pretty well with that as well. But Bed Bath & Beyond, one of the original meme stocks here, gave this massive initial run on this short squeeze all the way up to $53.90. And this has been and still is a very heavily shorted stock. I'll talk about that in a minute. So really throughout almost all of 2021, I've been trading this name very consistently alongside, and I've been able to capture these short squeezes when they've come in. We had a second big short squeeze occur in early August 2nd. You can see that the stock ran from $27 to $44.50 all in one day. Came back down, a lot of volatility. Gave a third smaller short squeeze on the last day of August 30th. Had a big run all intraday from 30.60 to 39.30. And then off of that kind of third big short squeeze, it started to encounter a lot of resistance at the $30 level. Every time it got up there, it was kind of consistently failing. I was noting that, selling stock into the $30 area and kind of buying it on the dips. And it kind of just turned into a little bit more of a grinder, started to lose some support. I had resistance at $30 and had some support around 26 or so. Lost that support in September and was grinding lower into the earnings report that it had at the end of September. This earnings report was a complete and utter disaster. It was honestly like one of the worst earnings reports I can remember. Luckily for me, I had been doing very well trading this thing pretty consistently for almost the entire year, because I did hold some stock in Bed Bath & Beyond into that earnings report, and obviously took a nice little hit as this thing ripped lower on just deplorable numbers. They totally missed across the board. I think EPS came in at something like 2 cents when they were expecting 56 cents. So they missed on EPS huge. They missed on revenue. The guidance was not good either. They guided lower. It was just unfortunately a really bad earnings report, especially for someone who was long and was in it. And if anything, it did give some justification to the shorts and potentially changed the fundamental thesis for Bed Bath & Beyond. So what has it done since then? Well, it bled lower and then kind of created a base into this $14 area. So it's been basing around $14 for pretty much all of the month of September. So that's kind of your broad support level. We started to see last week, and then probably not coincidentally yesterday, a decent amount of bullish option flow start coming into the stock, which is one of the things that my team and I pay attention to. We pay attention to the institutional option flow that's coming into the market. It can be market moving, and it's the one real glimpse that we can get into what the smart money is kind of doing now. And off of that option flow that came in, the stock caught a pretty big bid the last 2 days in a row. And then right at the close yesterday, a big announcement came out that ripped this thing up like 100% after hours. The stock after hours yesterday traded to above $32. Just a huge run. And that was, closed yesterday at $16.75, ripped to over $32. Basically was up 100% after hours. So what the heck happened? And we can even take a quick look at a 5-minute chart for pre and post market, because I'm on a professional trading account with T3 Trading Group. I can actually trade and see the market starting from 4 a.m. Eastern all the way to 8 p.m. Eastern. I actually traded Bed Bath & Beyond till pretty much 8 p.m. Eastern last night, and then I restarted trading it around 5:30, 6 a.m. again this morning. So I've been trading a lot of this thing over the course of the last 2 days here. But basically, look at this move after hours, just huge. Ripped straight from below $17 all the way up to a high of about $32 before pulling back a little bit after hours, pulling back a little bit pre-market, and then pulling back further during the trading session today. So again, what happened? A couple things. They announced that they are looking to entirely change their business model, which personally I think that is them trying to grab headlines as much as it is true, because I actually think that they've already been focused on trying to change their business model. They've already been trying to focus on e-commerce, but the big news that came with that announcement is that they were making a partnership with Kroger. Kroger being one of the largest supermarkets in the country. My understanding is that soon at those supermarkets you're going to be seeing Bed Bath & Beyond products there as well, and that you'll also be able to start purchasing Bed Bath & Beyond products on the Kroger website also. In addition to that, and this is an important one, the buyback. I love being long a company that has a strong buyback. It's always reassuring when you're long a stock to know that the company itself is on the bid for that stock. So they basically announced that they still have about $400 million left of the $1 billion buyback program that they currently have in place, and that they're looking to accelerate that remaining $400 million of stock repurchases to complete it by the end of their fiscal year. Their fiscal year ends in February. So that's a pretty short period of time for them to come in and start buying $400 million worth of their own stock. So basically what you have is a perfect storm of them accelerating the buyback, them announcing a business model change, and a short squeeze. This was a Wall Street Bet meme stock for a reason. It's heavily shorted. Now the thing about short seller information, to know the specific percentage of a stock's float that's short is actually a little bit difficult to do, because I think that those numbers are only reported on a monthly basis. And if you look at different resources, you'll probably see different things. I think that the number is around 26% of the short is float, which even of that in and of itself is a huge number. But I've also seen it quoted even above 50% in certain articles. So regardless of what the specifics are of the number, we know that Bed Bath & Beyond has a huge short flow. And being short this market environment the last year plus has been a really dangerous game to play. Between what we saw in GameStop and AMC, whether it's justified or not justified, some of those shorts, some of those big funds got completely blown out of the water. And Bed Bath & Beyond, obviously being one of the original meme stocks, is also in that category. And that's kind of where we're at today. So, huge move, huge run after hours, ripped all the way up to $32, dribbled lower after hours yesterday and pre-market this morning. And then today, they were able to hit this thing all the way back down to $20. The stock has been really heavy on an intraday basis. Heavy meaning a lot of selling, heavy meaning every time the stock attempts to uptick, it just runs into a lot of selling and has not been able to get any real legs under it. So, we'll see what this change in business model is able to do for the company, because this is coming off an honestly deplorable earnings report from that last quarter. But for sure, that buyback information is something that excites me. The fact that they've got, I think $1 billion still in cash on hand is something that excites me for this type of company as well. It's not like they're going to be going bankrupt anytime soon. So this is a trade that I'm looking to stick with. And intraday here, trying to base around this $20 area. We'll see how that's able to hold. And we'll see if the apes out there are able to give this one another squeeze. I'll see everybody next time. You should definitely check out the ProDesk virtual trading floor that I'm running. There's some links in the description there where you can learn about how you can get involved. And there's also a link to my free ebook where you can learn about becoming a professional trader at T3 Trading Group like I am.